Hello and welcome. This is your weekend market analysis for the 14th to the 18th of August 2017. Last week was indeed a very volatile one, and this volatility is bound to continue until the month of August comes to an end. Okay. All right. Also, the Trump's fury and fire statements on North Korea also added some spikes to price action, as we observed in last week. Well, as pure price action traders, we will continue to trade valid trading opportunities offered by the naked charts. Okay. Without any waste of time, let's now move into the Forex Factory economic calendar to see those high impact news announcements that are scheduled for this upcoming trading week. All right, as you can see in the Forex Factory economical calendar, we have quite a number of news announcements here for this week, beginning from Monday to Friday. Okay, intraday traders, you need to be bothered about all of the news announcements here. Okay, but long-term traders, you want to pay attention or keep this on your notepad. The monetary policy meeting minutes will be released from the Australian dollar axis. Okay, you want to keep that in mind. Also, this week, Wednesday, is another FOMC meeting minute. All right, so that is another volatile price action that we are expecting. So you really need to keep this news announcement on Wednesday on your notepad. That will be released from the American dollar axis. This is a very volatile news item. All right, FOMC meeting minute, where decisions will be taken about interest rates and all of that. So both long-term traders and intraday traders must really pay attention to this. Okay. Again, unemployment rates are coming from Australia. This is another news announcement that spikes the market in heavy momentum. So these are the major news announcement that long-term traders should really be bothered about. Okay. All right, having FOMC announcement meeting minutes released for this week, that means we might see some slow price action from Monday to Tuesday, and also in the better part of Wednesday, before this news announcement is being released. Okay, so no matter what the case is, we will continue to follow the charts and only trade value trading opportunities. Whenever you trade out of your feeling or out of your emotions, you are very likely to end up in a loss. I have had that experience, and in fact, that is something that I will never ever do again. All right, even if you have the feeling that price is going bullish or bearish, you don't want to click on your buy or sell button. You only want to trade when you have value trading opportunities. Okay. All right, so let's keep all of this on our notepad for this upcoming trading week while we move on straight into the charts to do our weekend market analysis. We are now looking into the euro against the American dollar, the weekly time frame. Price is sitting above that level of resistance that we analyzed as of last week, and right now it is still looking bullish. The bears are not giving any hint of taking control of this pair for now. Okay, we are expecting some hesitation around in here, but you don't want to go short above. You don't want to go short above this level of former resistance, which is now acting as support. Okay, as long as price stays above this level, you want to keep searching for long opportunities in the euro against the American dollar. Let's see the daily time frame to see what we have in there. Daily time frame, that hesitation continues. You can see price hovering around that level. Okay, even in a sideways bias, more of a channel. Can you see that? So we might have price coming back down again within that channel, maybe banging up that point and coming back down. Well, this is not clear enough, and there is no valid setup for us to trade with this pair for now. So we are going to sit on the sideline waiting for something valid to happen, no matter how long that will take. Okay. All right, let's move into the 1 hour time frame. Let's just see the intraday charts on the euro against the American dollar. Well, this chart is quite immense. Okay, so I am going to delete this line. What do we have in here? This level of resistance has already been damaged. You can see what price has done in there. So let's remove that line. Just mark the obvious swing high for the last day, which was Friday. And this rising trend line is not really a solid one, this trend line right here, but let's just keep that line. Okay, but before that line we have this level here as support. Okay, so these are the levels that price has to deal with in the 1 hour time frame. This level right here, support. In fact, this is a confluence point, and this level here as resistance. Right here there is no valid setup for us in this pair. Okay, all right, let's move into the next pair and see what we have in there. This is the American dollar against the Swiss franc at the daily time frame. I do not intend to waste much of your time here. Okay, whenever you pull out a chart to analyze, aside from your trading strategies, all right, aside from your trading systems that tells you what type of setup you want to see, the entry, the stop loss, and the profit target, you always want to identify the trading pattern that you are seeing in your chart. All right, the kind of a price pattern, because a price moves in patterns. It's either you are seeing a standard trend, you are finding triangles, you are finding a standard ranges, you are seeing expanding ranges, and all of that. So you want to identify that at first. Okay, all right, remember in this pair, the American dollar against the Swiss franc, as we analyzed in the live broadcast room, we had this level. That was a counter trend line right there that has been holding price as resistance, and this one here again as resistance, more of a confluence point. And last week this was a trade that we took. Okay, a nice trade right there. Okay, so that is now over. It is now indeed over. In fact, initially the pattern we had in here was a channel. Okay, that channel came to an end when we got the breakout to the downside. Then the overall fake breakout there, price push back up again, breaking the upside, putting this entire price action right here, all of this entire price pattern to an end. All right, so that price pattern came to an end. So now we need to actually identify what is happening around this area, the current price area. That is where you want to begin to concentrate your analysis. Okay, so in the American dollar against the Swiss franc, what are we seeing here around this area of the chart, considering that all of this price action here has come to an end? Well, visually looking into the chart, you need to see that price is making lower lows, all right, and higher highs right there. So this is an expanding range. We had analyzed this already in the live broadcast session, and I am trying to put that clear again to us. Okay, so this is the pattern that we are seeing in this pair. That means if this pattern will hold true, a price should of course be pushing to the upside from here on to try to challenge the upper boundary of that expanding range again. This is a market confusion type of price action, and usually we tend to be very careful trading in this type of price action. Okay, and as you know, the American dollar against the Swiss franc is in a negative correlation to the euro against the American dollar. That means if the American dollar against the Swiss franc is to push to the upside, then the euro against the American dollar is bound to come to the downside. All right, so that is how you can benefit from reading these charts correctly. That means wherever the euro against the American dollar is right now, price might be coming down from that level, while the American dollar against the Swiss franc will be pushing to the upside. Okay, now this pattern belongs to the 4 hours time frame, so let's read price action clearly in the 4 hours time frame. All right, as you can see, the 4 hours time frame, let me take out these lines. Okay, just like we did analyze in our live broadcaster session, this is the expanding range that we are seeing right here for the American dollar against the Swiss franc in the 4 hours time frame. Price kept bottoming around that level, bouncing off that point, and we said this level should be acting as support, while this one here is now acting as resistance. So ideally you should not be clicking on your sell button against this level of support. If you want to remain profitable, if you want to remain on the safe side, you don't want to trade against any level, I repeat, any level of support and resistance. Okay, you only want to be searching for short opportunities once price violates this overall pattern and breaks to the downside. Okay, then you should be searching for short entries for further pushes to the next level of support. But for now, prices are sitting above that level of support, and traders will be looking for long entries from that point on. Okay. All right, so American dollar against the Swiss franc, price is on support, and we don't have any valid setup for us, but this is the type of price pattern that you are seeing in this pair. Okay, in the 1 hour time frame, are anything good here? Let me bring back my lines. All right, I'll select all. All right, in the 1 hour time frame, we don't really have anything valid, not even the market flow setup. The 3SM indicator is calling for a downtrend, so let's fire in that indicator to see what we have. The downtrend is indeed a really horrible one, okay, a very bad one. We got that first bounce right there, but upon taking the previous swing low, see what price has been doing at that level. That is a very good sign of hesitation that you need to stay away from trading in the direction of this downtrend. Okay, all right, so nothing here, but you need to keep in mind the type of trading pattern that we are seeing in the American dollar against the Swiss franc. All right, let's move into the next one. The euro against the New Zealand dollar. This is the daily time frame. Last week we were waiting for price to come all the way, challenging that significant swing high that we have right there. Okay, and on Friday we got that challenge, and price closed, as you can see on my chart. That is a spinning top. Okay, it's a spinning top, which is one of those reversal signals that we have talked about, that Hector indeed has analyzed in the mentoring course. All right, but then this reversal signal falls within the low quality type of reversal. Okay, it falls within the low quality type of reversal, so this is optional to you to take the trade or not. If you want to take the trade, then you simply want to place your sell stop order 5 pips below the spinning top itself. All right, that should be your sell stop order. Your stop loss wants to go 5 pips above the spinning top. Okay, that is how to trade this, but then it is not just a low quality setup by being a spinning top, as you can see here. Okay, let's analyze further. Now if you take a trend line connecting this high, all right, with this point right here, that price was finding resistance and a difficult time to break. Okay, connecting that high right there, you will see that price is sitting just above that level, which might be acting as support. Okay, so price has to deal with that level by breaking to the downside. Okay, all right, so if you are placing an order, then you are also challenging that level and hoping that price will break to the downside. In the 4 hours time frame, let's do another analysis right here. You will see that price is also trending to the upside with solid bounces. Let me take out these lines. I don't want any confusion. I want you to get the exact message. Okay, you will see that price has been respecting this level, bouncing to the upside. In fact, before the news announcement for last week, we had trend line this way. Then the New Zealand dollar interest rate announcement was made. price came all the way to that trend line axis and shot to the upside. Okay, that means that this trend line is an effective line and has been holding price, and that also means if you are taking any short entry in the daily time frame, you are challenging this level of support. Okay, all right, let's readjust this trend line since price has taken out the previous swing high. So you need to readjust your trend line this way. All right, that is now the most valid trend line. So in the daily time frame, if we are clicking on our if we are placing our sell pending order right there, we are actually trading against this 4 hours level of support. Remember, the daily time frame and the 4 hours time frame are closely related. All right, they are closely related. Support and resistance in the 4 hours time frame can affect any trade that you take in the daily time frame, and support and resistance in the daily time frame, of course, it's a higher time frame, can affect any trade that you are taking in the 4 hours time frame. Okay, likewise, support and resistance in the 1 hour time frame can affect any trade that you are taking in the 4 hours time frame. Okay, but you don't want to go lower than the 1 hour time frame. Support and resistance in the 30 minutes time frame cannot affect trade that you are taking in the 4 hours time frame. Okay, because the relationship is quite far, but the 1 hour time frame and the 4 hours time frame are closely related. So you want to be careful whenever you're trading the 4 hour setup. You want to be careful with support and resistance coming from the 1 hour time frame, and that is the same thing that we are doing here. We are spotting the setup in the daily time frame, that's spinning top. Okay, and we are having support in the 4 hours time frame. So you want to be careful trading against this level of support in the 4 hours time frame. They are closely related. Okay, all right, so aside from this trend line and aside from that level of support that I have showed you in the daily time frame, what else? Let's try to draw our Fibonacci retracement tool. Fibonacci retracement tool from this bounce to this high right there. You will see that this area where we will be placing our sell stop order constitute a potential bounce point for price to push down, bouncing off that area to the upside. So you really don't want to begin to look for short trades around that area with that daily spinning top. Okay, also let's try to draw the counter trend line that we are seeing in the 4 hours time frame. This line, I just hope it's going to make some sense. All right, that line right there, probably it might fall in line with the daily level of the daily counter trend line that we drew initially. Okay, that level, price is currently finding some difficulties around that area. So this area where we are supposed to place our sell stop order based on daily spinning top is quite a problematic zone to make that trade. Okay, it's quite a problematic zone. At best, at the very best trading decision, you want the trend line coming from the 4 hours time frame to be broken to the downside. Then you want to look for your trend collapse entry, bearing in mind that you will be cruising all the way to the downside in a highway free of traffic. Okay, so that is the best course of action in this pair for now. Let's see, the 3 SMA indicator is calling for the trend filter is calling for an uptrend in the 4 hours time frame, as we can see right here. So let's apply the 3 SMA indicator to see what type of trend that we are having. All right, this is indeed quite a valid trended market scenario here, with price bouncing off the dynamic area of support and resistance. And just like we showed, if you take your Fibonacci retracement tool from that low to that high, this constitutes a potential bounce point. So if price are indeed swing to that level, right there to that area, we might be finding a valid entry to the upside. Also, you can see that we have a previous swing high right there, that level. Also coming to that point, we might have another bounce to the upside, but then we are not even prepared to take that trade because of the daily level of resistance. Okay, because of the daily level of resistance. Let me take out this alliance. All right, because of that daily level of resistance where price is already reacting off, if we click on our buy button, we'll be challenging this daily level of resistance. So we, at best, again, the trading decision is to wait for this level here, this half for 4 hours trend line to be broken to the downside for the trend collapse setup, or for the daily level of resistance to be broken to the upside for us to keep searching for long entries. Price is in the tight corner and you want price to move out of that box before you want to trade. Okay, all right, back to the daily time frame. The spinning top is there, and unfortunately we will not be taking this trade. We'll be following very closely in the 4 hours time frame. All right, enough of this. Let's move into the next pair. The sterling pounds against Japanese yen. In fact, this is one pair that I am really liking for a pullback to this area right there. Okay, I am really hopeful that we are going to see price pulling back to retest that area that acted as support and may now act as resistance for us to look for another shot to the downside. In fact, technically speaking, the sterling pounds is bound to see some strength in this upcoming trading week. So you want to be careful trading, feeling that the sterling pounds will be weak again for this week. So for the sterling pounds against the Japanese yen, we are expecting price to keep making the pullback to that area where we will be searching for short opportunities. Within this week, I am very sure that this level will now belong to the daily time frame. Okay, it's already becoming too old for the 4 hours time frame, but then we are still keeping that with the green lines, hoping that this week we are going to be changing that to the red line. Okay, so we are waiting for the pullback to that level as long-term traders to look for bounces to the downside. Initially we had this line right here. Let me readjust that. We had this rising trend line. Okay, and let me take out this. Should I even take? Let me take out this. Take out all of this as well. All right, and we were expecting price to respect this line. Okay, but price did not, and price is trading slightly below that line right here where we found support and support. But then this line is quite weak, a very weak line, and price is not likely to bounce to the downside. We are not expecting that at all because they are pushed to the upside here in the previous swing high. That high was not even retested or even taken out, so there was no trend at all. Even if we were having a market congestion, all right, sideways price behavior, this line is still too weak. Okay, so we have taken out that line, and we have actually chosen to keep this level of support instead. Okay, now assuming that price is not going to find any resistance around that level, and also assuming that the pullback is starting already, we can begin to search for long opportunities in our intraday time frames. So let's see the 1 hour time frame. 1 hour time frame right here. I am also liking this pair in the 1 hour time frame. We got that nice fall to the downside. Okay, nice push to the downside, and price gave us this hesitation here, which is a sign of exhaustion that, hey, I am not able to keep pushing to the downside again. I might be seeing some temporary reversals to the upside. Okay, we are facing the 1 hour level of former support, which may now act as resistance. Well, we are also looking at a possible trend collapse setup for the sterling pounds against the Japanese yen. We got this downtrend and price coming back up to close at the extreme of Friday's daily box indicator. If we find a sideways Tokyo range around this level of resistance right there, all right, any break to the upside, any push above that level to the upside, well, price is bound to remain to the upside for the entire day. Also, to the downside, we will also be looking to trade that trend, that London open breakout setup. But bearing in mind that we might be having a pullback in the daily time frame, we will be happy to look for long opportunities based on that London open breakout setup. Okay. All right, so let's keep this on our radar. We are looking for a pullback in the daily time frame, and we are also looking for a London open breakout setup in the 1 hour time frame. All right, how about the 3 RSMA trend filter calling for a downtrend right here? Let's see what the indicator looks like. In the 1 hour time frame, we are seeing a price trading around the dynamic area of support and resistance, and with the number of bars already in that box, well, I am not sure we are going to be seeing a bounce, but I am going to let price speak first, and if price fail to bounce to the downside, closing out of the dynamic area of support and resistance, and even if we get that close, all right, if price close somewhere in here, the first target might not be something that you are willing to trade. Okay, the first target might not be something that you are willing to trade. Also, you can see that the previous swing low right there is falling outside the dynamic area of support and resistance. Even if that is going to be our conference point, we are not going to be taking it because it is not valid. So this downtrend is really not reliable, and you don't want to go short. Okay, in the 4 hours time frame, still very far away. Okay, still very far away, and we have not even gotten the first bounce, so we are not trading the 3 SMA strategy here. Okay. All right, this is that for the sterling pounds against Japanese yen. Let's look into the next pair. This is the Australian dollar against the Japanese yen in the weekly time frame. We are going to carefully analyze this pair. Okay, in the weekly time frame, the most obvious level of resistance is this one right here. Okay, right there, it has not been tested. These ones here have been messed up. You can see price breaking up and down, condemning that level, so it is not valid. This one here is not really we are not sure about that. You can see how price has already condemned that. So the next one to really consider, if you have to analyze this pair very deeply, looking for the pattern of price action that you are seeing here, the price action pattern in particular that you want to trade. At first, you might be tempted to have an expanding triangle. Okay, this pattern, although that is not what we'll be looking at this time, you might be tempted to have an expanding triangle. Okay, but before this expanding triangle, you should be looking at the possibility of a channel formation. All right, just connect these lows where you have those harmonic bounces right there. You should be looking at the possibility of price channeling, finding resistance at that point, support, and support right there. Okay, these are the possible type of price patterns that we are expecting for the Australian dollar against the Japanese yen. All right, so that means at any rate, the directional bias for this pair still remains to the downside. Possibly price is coming to challenge the lower boundary or the lower leg of this channel formation, or even the expanding lower leg of that triangle that we drew initially. So the Australian dollar against the Japanese yen might be pushing to the downside as its original direction, as the overall bias in the weekly time frame. Okay, but before then, price might be facing some levels of support right now. If you try to connect an inner line, this is quite micro and very hidden. I am sure you are seeing the same thing that I am seeing there, right there. Okay, so this is an area you wouldn't want to go short. At least you want price to break below that level before you want to go short. So that is a level of support. Let's leave that line there and move to the daily time frame. All right, in the daily time frame, we are going to adjust that line to get it more properly. to be exact with that line. All right, you can see how price faced resistance there, an area right there, another sharp bounce off that level, and right now price is bouncing off that point. That point is not just alone. This line is not just alone. You can also see another one right here coming in confluence around that junction of the chart. So we are having a confluence at that particular level of despair, right? There's a confluence point in here that price should be bouncing to the upside. In the Australian dollar against Japanese yen, well, you only want to be looking for long opportunities, and as you can see, this level here held price, and we are having a standard pin bar right there. Okay. These levels might not be significant enough for us to trade based on the part-time trading strategies, but at any rate, it's worth it. This is a level of support, although not too obvious, and this one not too obvious indeed in the daily time frame, but at any rate we got a bounce. Okay, so if we are trading this, you want to risk not more than 2% of your account balance, because price is bound to make a temporary move to the upside and might still come back down. So you really want to be careful with this and cash out profits as soon as possible. Okay, also if you look into the 4 hours time frame, but before that 4 hours time frame, you will see that we have some sort of a trend. Okay, and remember I told you that once you have a setup coming from the daily time frame, you want to be careful trading against all levels of support and resistance in the 4 hours time frame. So let's check the 4 hours time frame if we have any level of resistance that this setup is against. All right, let's check the 4 hours time frame. 4 hours time frame, the trend line is already there, and you can see it very clearly. Price is actually heading against this trend line. That trend line, with price giving us some bounces off that area, could act as resistance against that trade. At any rate, if you place the buy stop order, all right, you want to cash out significant of profit before price hits this trend line. I mean, a very significant profit before price hit that line. Let's say 60% of your profit, and also move your stop loss to your entry position. Okay. If price hits that trend line and comes back down to hit you at a break-even position, well, you don't want to worry about that. This level here belongs to the 1 hour time frame, so don't worry, that shouldn't be a problem. If we place our buy stop order, we want to cash out 60 to 70% before price hits this falling trend line. Okay. At any rate, the bounce in the daily time frame looks valid, and we might be taking this trade, cashing out profits before price hits our 4 hours level of resistance for a possible reversal, for price to continue its merry way to the lower leg of that channel in the weekly time frame. Okay. All right, so that is what we are seeing here, so just keep that. Now let's look into the next pair. You are now looking into the sterling pounds against the Swiss franc. This is the daily time frame. Remember, in our weekend market, in our live broadcast session for last week, we did analyze this pair, and I was telling you that this is an area you don't want to be searching for short entries in your intraday trading. Okay, that's simply because price was trading around the last line of defense. And what was the last line of defense? We took our Fibonacci retracement tool from the low to the high, and we talked about price trading just around the 61.8 Fibonacci retracement area. That was indeed the last line of defense, and as you can see, price failed to close below that level. Closing above means the bulls were able to sustain that fight, and they are very likely to push price again, maybe to the 38.2 Fibonacci retracement area. We are expected to see some ranges within this Fibonacci retracement area. Any if whatever be the case, whether it's the bulls or the bears that are able to drive price away from that point, that will become the next directional bias for this pair. But for now, price should push to the upside to retest the 38.2 Fibonacci retracement area. Okay, so this is a good point to be searching for long opportunities if you are trading the intraday time frame. So let's see the 1 hour time frame and what possible setup that we are expecting in the sterling pounds against the Swiss franc. Now you can see a trend line running from the 4 hours time frame, and that trend line has been broken. All right, price is just trading out of the trend line, a little bit above that trend line, and we had this intra-week trend previously. Okay, so with price closing at the extreme of a Friday's daily box indicator, if we find a sideways Tokyo range, we will be interested in trading the London Open breakout strategy for a solid push to the upside, trading a reversal move against this original trend. Okay, that reversal move is obviously backed by this trend line that has been damaged. Okay, so this is something that we like, and it's something that we are following for Monday. We are hoping to see that sideways Tokyo range and a possible breakout to the upside. We are not interested in breakouts to the downside, all right, because the trend line is still there. So we'll be looking for breakouts to the upside. Valid, all right, it will be a valid London Open breakout setup. All right, this video is already too long, and finally let's take the last review, which is of course the American dollar against the Japanese yen. Well, you can see price in a very large range. Okay, initially towards a triangle formation, as price was giving us a higher swing lows right there towards a triangle formation, and right now price is trading below that level that was holding price as support, and now that level has been broken. That means if price pulls back up to that area, this level that was acting as a support might act as a resistance. Okay, like I said, you don't want to trade against any level of support and resistance. So if you click on your buy button, you will be challenging that level, all right, for a possible bounce to the downside. If you try to adjust your line considering this level, this level right here, well, you might be correct. Okay, you might be correct at trading off that point, but then look at the candle itself again. This is a low quality type of candle, at least according to my broker. Okay, it's a low quality candle, and you should not be trading that type of reversal. All right, it's a doji and a very low quality one indeed. At best, this is the next level, the most obvious level of support that we will want to keep. This one right here, even an area, you can mark it as an area. That is the next level of support. And even if this was bouncing, excuse me, all right, even if this candle here was bouncing off a significant level of support, we will not be trading it because of the quality of the candle itself. Okay, so rule this out and do not trade. I have actually reviewed this pair because one of my very good friends called for that, and I have simply given my opinion on this. Okay, all right, it's close to 40 minutes of this review. I am sorry again taking much of your time. This is basically all. We'll be talking about much of other pairs in the live broadcast session from Monday to Friday. So we are always in the charts, looking at the market back to back, and trying to analyze and find potential trading opportunities. Trust me, you only want to trade valid trading opportunities. For those of you who were in the market as of last week, if you are taking the only 3 setups that were posted in the signal section, you would have remained positive for that last week. Okay, if you took any of the aggressive trades, well, I'm sorry, you must have made some losses. That is why it's important that we trade only valid setups and the ones that are posted in the signal section. Okay, all right, again, thanks for watching. I will be talking to you in the live trading session. Cheers and bye bye.